In the past few years, Netflix has been undertaking a huge international expansion, as you can see in the graph below. I know it's only until 2019, but you can see how they went from the USA being almost twice the size of international users in 2015 to international users closing up on being twice the size of USA users. And believe me, the trend has gone in this direction up until now, 2023. So today we will be looking at a market leader which has recently been improving its cash flows considerably since it had a great 2023 year, and it's improved its margins, and the competition is becoming less intense in this year than it was in the previous years since the pandemic. So Netflix, in my opinion, the king of content. Netflix says that it is one of the world's leading entertainment services, and I believe them, with approximately 231 million paid memberships in over 190 countries. So they are basically everywhere. Their primary revenue source is, of course, the monthly membership fees that they get from their services related to the streaming content to the users. I believe that the majority of us watching this video are subscribed to Netflix, and their core strategy is to grow globally within the parameters of their operating margin target. So this is wonderful because it is a company that prioritizes keeping their margins consistent rather than prioritizing increasing their revenue without any control over their costs or their margins. This is great to see, especially in a company with the size that Netflix has and in such a competitive industry in where they're in the current moment. They grow by offering compelling content that attracts new members. That is their primary strategy, and I believe that Netflix is the best at providing this type of content. And they do believe that their membership is non-cyclical and it's very resilient and stable. However, it can be impacted by content release schedule and pricing changes which have been carried out recently. Their financial analysis looks great. They have a return on capital employed of 12%, which is not insane, but I believe it's good for the company. These numbers are from 2022. Always also remember that. And 2023 was an amazing year for them. They have good margins of 39% and 18%, which are above the industry standards. They have an interest cover of 8 times. I prefer to have companies that have an interest cover higher than 10, but for a company with a stable revenue and income as Netflix, I believe this is allowed. And a pretty low cash conversion of 36%. However, the cash conversion is how well or how good they are at converting their their net income to free cash flow. And in 2022, it was really low because they were heavily competing with other streaming services and creating very expensive content. However, this year, 2023, they've been able to not invest as much, get the same returns, which has heavily improved their cash conversion and, of course, any other metric related to their free cash flow. In terms of fundamental analysis, I believe this company is a solid 7 out of 8. They have very low liability risk because I believe that even though they have a lower interest coverage ratio, they will have no problem in paying it back. They have a very solid balance sheet. They do conduct small share buybacks and are increasing them over time. They have incredible pricing power. They are a huge monopoly with great moat and competitive advantage. They are good and great at creating organic free cash flow growth and organic revenue growth. The only one I didn't put here was the cash flow consistency because, as I said, they do sacrifice a lot of cash flows in order to enhance and improve the content that they are generating. However, in this past year in 2023, they have demonstrated that they can be consistent with their cash flows if they want to. And if competition decreases or becomes less intense, this company will shoot up in terms of cash flows. In terms of long-term analysis, this is a company which follows clear secular trends, and they are amazing at creating content that their audience will like. Why is this secular trend? Well, because streaming services are the thing that is hot now. It's one of the highest growing industries right now. So that is insane that a company like this can be leading such a profitable industry in that sense. They grow by 2 different avenues. The first one is attracting new users, which they are great with different series such as the Squid Games, such as Stranger Things, and all the series that we have all heard about or even watched. And then the second one is increasing revenue per user, which they are amazing at doing because when they are not able or do not want to increase their pricing, they've just thought out of the box and invented new pricing strategies, such as recently they said, okay, we're not going to increase the prices of our subscriptions. We're actually going to decrease them, and we're going to create a new tier where you pay a smaller fee. You still pay a monthly fee, but you pay a smaller fee in exchange for using the same service you're using, except the only difference is that we will put ads on the content you're watching. This different subscription model is actually bringing more money for Netflix than the more expensive subscription models that they have. So even though more people have been subscribing to the lower priced subscription model, it's better for Netflix's bottom line. So this is amazing for them. I just like companies that think about these type of things in such a creative way. And Netflix is one of those companies that is highly innovative, and they can bring this to the table and do it successfully. So that is amazing. In terms of valuation, I think right now they are priced, and I think this is reasonable, but I think Netflix is priced at a bit of a premium just for one, how amazing of a company it is. Two, their growth rate is priced in because they're having very high growth rates. And three, the fact that they're the leader of one of the fastest growing industries right now is also making their price a bit more expensive than what the average investor would want it to be. However, this is still in the PE ratios that is lower than in 2020. The reason for this, however, is that in 2020 we had the pandemic and there was a huge rise in the prices for any kind of company that benefited from people staying at home. Netflix, of course, being one of them because people could watch more series than beforehand, and it actually accelerated their user growth. However, if you can see in 2023, 2022, it's actually at a big premium to what it was trading, and it's had incredible returns over 2023 and 2022. So that is why. Currently, it's sitting at a free cash flow yield of 2.75%, which is smaller than the long-term inflation rate. It's not too small compared to the 3%, but you are still buying it at a premium. In terms of risks and possible challenges, I think Netflix is an amazing company. The only one I put is the competitors, and not because of the competitors will be able to steal Netflix's market share. I don't believe that, because they will pressure them to spend their free cash flows. And I, as an investor, would not like my company to spend their free cash flows in another way that is not either buying back shares or paying out dividends. And then regulatory, performance, and market, I don't believe there are actual very big risks for Netflix. And this is being conservative. I don't think there are regulatory changes coming in the industry as a whole. I don't think they're going to miss any performance objectives that they set because their revenues are extremely consistent and their net income as well. And I don't think if there is an economic downturn that people will unsubscribe from Netflix, because it's for all the different expenses that a household usually has, Netflix accounts for so little and gives you so much value that I think it would be one of the last things to go. So in terms of investment conclusion, before this, of course, I'm not a financial advisor. This is not financial advice. So if you want to buy the company, please do your own due diligence. But now the investment conclusion, I believe that Netflix is a company that has an incredible moat with strong competitive advantage. It can provide consistent cash flows. It has the ability to provide one of the most consistent cash flows in the market with huge predictability and resilience. And they have high return on capital employed, which is good in order to create value for the investor. So I believe that this is a great company which will be able to provide high returns. But please do your own due diligence. So as always, this has been the Cashflow Compounder. Thank you for watching. Join the free Patreon for extra content, and there is a link in bio for a free stock if you join either Trade Republic or Trading 212.